Welcome home, everybody. Thank you so much for being with us. Jamie and I are here today with Miss Lisa Millman, CPA, and also leader of a fantastic nonprofit called Active Abundance. So we wanted to just kind of kick off today. It is coming on tax season. We're here.
It is.
And ask Lisa some questions about tax benefits and homeownership. And I think a great way to start, Jamie, and you may have more questions, but the first one is like top 3 benefits. What does it mean from a tax standpoint to be a homeowner?
Oh, well, it's kind of a loaded question because of the standard deduction, and we'll delve into that. But I would say if we're just looking big picture, standard deduction versus itemized deduction, are you able to deduct your mortgage interest and your property taxes? A long-term view, capital gains exclusion, and then maybe some home energy improvement credits that are new last year. So those are just big
picture. Can I throw in a question right now?
Yes.
This afternoon, I've got to get a new HVAC unit.
Okay.
Is that going to have a tax benefit for me?
It could, yes. We always say it could.
It could.
That's our answer also.
Because all these are very specific to your tax situation. So we are talking, this is no professional tax advice, like to your, want to give that disclaimer. But yes, now there used to be a 500 lifetime cap on that. Now that's crazy. But you could potentially have a credit in 25.
Okay, I'm going to hope so.
So yeah, but talk to your tax professional.
Okay,
yes.
So the 3 top benefits are the deduction and
capital gains.
Yes.
And then the home energy. And then there's other things too, but those are I would say those when people talk about I want a tax benefit, that would be the 3 primary.
Gotcha.
So let's say there's a brand new homeowner, came from renting or came from mom, dad's house or whatever. Can you explain kind of just real briefly what those things mean? So what the standard deduction means, what capital gains means.
There's been some changes over the last, I'd say 8 years, because there were some new tax changes that went into effect when the last time Trump was in office. It was a 10-year span. They're coming up to expire at the end of 25. But it raised the standard deduction for married filing jointly from like $12,000 to $28,000, or it doubled. And so back then, most people had low interest rates and the cost of their homes weren't so much. So they weren't really itemizing their mortgage interest and property taxes. So they really weren't getting a true immediate benefit. But now the environment that we're in, that standard deduction could change after 25, but mortgage interest rates are higher now and the cost of homes are higher now. So when I say you get a benefit, you get to actually deduct your mortgage interest and property taxes. But most people think they do if they send all their documents to their tax preparer, and a lot of times they haven't been because the standard deduction is higher. Mm-hmm. So, and normally when you don't get to write off dollar for dollar, it's your effective tax rate that you're saving. Mm-hmm. So it's a different environment now, because we are starting to see more mortgage interest and the cost of their homes. The last several years, people have not been deducting the mortgage interest.
Okay. So, I was unable to last year.
Yeah. So, but I think with where we're at, that's going to change.
Mm-hmm. And how about capital gains? So for somebody that doesn't really understand what that means.
Well, the great benefit of owning a home and you've lived there 2 out of the last 5 years and you're married filing jointly, you can exclude up to $500,000 of capital gains, $250 if you're single. So what that means is your gain. So the difference between what you sell it for and what you paid for it. So you could not pay tax on that money. Mm-hmm. So that's a huge benefit. Now, most people aren't moving every 2 to 5 years, but if you do, that's just equity in your home that and they changed the law a while ago that you don't have to reinvest that money. Before you had to reinvest that money.
Yeah.
So you don't have to do that anymore. So the money's yours. You can downsize, do whatever you want with the money.
Yeah. So, that was a big thing people needed to buy by the end of the year
So you don't have to do that anymore.
But now what a great benefit for how prices have increased over the past few years.
Right.
And that's true equity that you're not getting hit.
Right. Yeah, so it's a great benefit.
As somebody who works from home, I wondered about, and especially post-COVID, so many people work from home, right? And a lot of places just never went back to at location jobs, and a lot of people are able to work remotely. So one of the questions I wanted to touch on is, people who are able to claim home office space.
Okay, yes, that's changed also.
Okay.
So when the new tax laws came in, the unreimbursed employee expenses went away. So meaning if you were a W-2 employee, you can no longer deduct those expenses. So really the home office now is for self-employed individuals.
Okay.
Or could be an unreimbursed business expense if you're a partner. The one thing is also for the self-employed people, they came out several years ago. That's my favorite answer. $5 per square foot so you don't have to keep track of utilities and all that. And so you take 500. It's capped at 1,500. But when you go to sell your home, if you use that square footage method, you don't have to pick up any gain from writing it off for business, which is a great tax benefit.
Oh yeah.
So I normally encourage my clients just to let's do the square footage method. If you ever sell your house, you don't have to pick up the write-off that you used. So that's a huge benefit.
Yeah, great.
And I don't know what's going to happen because now, I mean, this tax law came in when people were not working from home. So I don't know what our government's going to do or will they put something where people can write off a portion of their home? I don't know. It's going to be an interesting 26 is all I can say. So,
Absolutely.
yeah.
So I just kind of have a thought. Is there any advice that you would give a homeowner on things that they maybe need to keep in case they're looking at
That's a great question.
deductions? Or is it really just all of those documents we get at the end of the year, like the interest statement?
Yeah, well, a couple things. So that, of course, for the mortgage interest and property taxes, your year-end tax forms. But if you do any capital improvements, like a lot of clients say, can I write that off immediately? No, that goes as part of your basis in your home. So I would keep receipts for any capital improvements. If you remodel a room, keep all those receipts. So when you do go to sell, you've got the receipts to add to your basis.
Okay.
And then, of course, if you're using the energy efficient credit, keep the receipt.
Okay.
Documentation's always good.
Absolutely.
Keeping those receipts is good for a lot of different
receipts. We
All
love
about
receipts. We love receipts. Yes.
Well, Lisa, how can people get a hold of you?
Oh, wow. I mean, always call in the office, this younger generation, they don't like to call, but yeah, they can always.
They want to text you.
Yeah, so.
But give them your phone number just in case.
Okay, 615-672-9205. And we also, the website, lisamillmancpa.com. I guess that's always a great place to start. Social media, always fun, but there's lots of ways. But yeah.
Nice, and we can link that in the comments as well.
Absolutely.
Thank you so much for this.
Yes.
It's such relevant information, and I think that homeownership comes with so many benefits, but of course, tax benefits are a big deal.
Oh, yeah.
And the thing that I think a lot of times you don't take into account if you're just throwing your money for rent, like you don't have anything that you're building up. But the fact that there are tax benefits also makes it a worthwhile investment.
Yeah. And just speaking of taxes, actually refunds are acceptable uses of funds. In case you're thinking about buying a house and you're getting a really good refund, we can use that towards down payment closing costs.
Yes, that's a great piece of advice.
Thank you so much for spending time with us today. Again, Lisa Millman with Lisa Millman CPA. It's Jamie Hill with One Stop Realty and Auction, and I'm Stephanie Fields with Mortgage Investors Group. Please hit like, share, subscribe to keep this content going.